All right, guys, let's kick this off. Okay, don't want to waste too much time. I don't have too much time today. Okay, but yeah, still waste a couple hours. It's not too bad. No, so I have to leave in, I want to say 1.5 hours. So let's go 1.5 hours today. Um, Not much here, you guys. I mean, same old, same old. I'm hyped. I'm happy. I mean, crypto's perking back up again. I mean, what else to be said, you guys, But I feel like, with this, oh, actually, yeah, we're going to talk about MSTR too, because I forgot to put that on the chat there. I mean, I change that later. But anyway, so MSTR and all that stuff, of course, again, it's worth taking a look at the strategy and what happened, what to expect, because we're kind of copying the model. I'm not quite sure if Ryan Cohen's gonna do the model completely or not. It's fun to speculate, right? Until we know exactly what is happening. But I feel like Ryan Cohen is a little smarter, a little more conservative in his approach. But yeah, you could be sure that that he's gonna buy whenever it's an opportune time. And what an amazing timing that was to buy Bitcoin at that price, assuming that he already bought it by April. So that's around 80,000 or so. Would be perfection if we were to see that he bought it at 70,000 range. Um, I wouldn't be surprised to see that at all. But yeah, perfection for sure. You know, play it like chef kiss type thing, like mwah, type thing. Excuse me, you guys. Like my voice is just not doing well today. But whatever, show must go on type thing. Hey, Michael, what's up? For non-Jimmy investor. Happy weekend. Of course, they're out having fun. It's okay, they'll come around. They'll come around when they see it at $50. Yeah, the $100 range. Typically, that's what they do. People don't tend to see something before it happened. They only see it after it happens already. And the news will make sure of that for sure. They will try to entice people to buy in at a high and then just to rug pull, because they know they have connection with the hedge fund. They have connection with, these financial institutes at, you know, okay, at any moment in time, I'm going to rug pull, try to get as many people as possible to buy at the high. And I wouldn't be surprised if, we saw that happen back then here, up here. Remember the narrative back then? Oh, it's going to go higher and higher. If you don't buy now, it's gonna be left out. Just, just be prepared for that news again. The same thing happened here. Okay. The news was like, well, Ron Kitty's back and all that stuff, and super strong, right? Like just to hype people up. Not saying to not get hyped, but just to be careful. I know, people are enthusiastic about buying at every level, but from what I am, standing at is that I'm gonna only buy when it makes sense to me. Okay, and then I have a price point, and my price point, my anchor point, is based on book price to book, right? Typically, I said 5 times book. Why 5 times? I take a Best Buy, for example, the competitor in the retail space of this sort, right? But you cannot compare GME to any other retail store. So if you say, okay, uh, GME is way too small for that comparison, okay, then 3 times book. Okay, what is 3 times book right now? $30. Okay, or a little bit more because now they have $6 billion, right? So let's do the math real quick. If that's the case, 6 point whatever times 3. So that's 18 or 19 billion dollars of market cap to get to where we are. And that's what let's assume that it's fully diluted. So then, okay, sorry. What am I doing? 7 days. Okay. What did I do just now? I'm figuring out price per share. Sorry. So yeah, $37 a share to get to 3 times book. That's pretty fair, I feel, right? So right now it's severely undervalued based on my book. Okay. So of course, if you subscribe to just 3 times book. And so, but my own subscription that I put on myself is 5 times book, which is, a lot more than $38 a share. But for now, $38 a share is good. Now, if you want a price reference too, is the convertible notes. Okay. So that's fair value, VWAP or whatever, at the current value, somebody valued GME at $30. I mean, can we go with that reference at least? So to say that GME is only worth $10, it's stupid. Number one. Number two, if you believe that, okay, wait until it's $10. No harm, no foul. It's pretty simple, yeah. But to me, simplicity doesn't, it's not exciting to get people into the stock. So you gotta have some flair, you gotta have some hype and all that stuff. To me, anything that's boring that I'm interested in, I love to buy, And when people are not looking into, just like what Ryan Cohen was saying, like the best time to buy is when people are not looking into it. And when the best time to buy Bitcoin was when people are so pessimistic about the future, which was tariffs. And that was, again, that's why it was such a perfect time. And perhaps he knew that this was going to happen. And he followed what, Trump was going to do. And that tariffs is going to have negative, negative reaction to everything, including Bitcoin. And again, maybe I'm just way too enamored by the CEO of my heart, but I want to kind of bring back my excitement in that. That I'm like everything that he does is perfect, right? So yeah, you have to be a little bit more careful on that too. So I'm just like taming myself over here. But I'm telling you, every single step that I've kind of see Ryan Cohen's doing is what I love, like in a person, in everyone, right? That yes, even though I'm a hype person, I get hyped up on stuff too, like Bitcoin, XRP, and all that stuff. I tend to tame myself because I'm becoming more mature in the market more and more as time goes on. And so I always leave thanks to somebody close to my heart too. So you know who you are if you're listening to. But I've learned to, okay, don't look at the plus side way too much. Okay, just leave some room at least for the negative part of the equation as well. And so that's why I'm becoming a little bit more, okay, let's buy when it makes sense. Okay. And if you're long term on this company, of course, do whatever's best for you. But I wouldn't buy up here, right? When it's already blown up. Okay. To me, like I said, the floor has been raised for me already. So fair value for me is up here. Okay. Fair value for the convertible bond holder is down here. Okay. So let's put that in the green. Okay. So that's fair value for the convertible bond holder in the future. Fair value for me over here. You see like how the discrepancy is? So let's compromise and come somewhere in the middle. I think that's fair. Huh? That's fair. Let's do that. So around here. There you go. Perfection right there. Let's do it in blue. What did I say? 3 times book? 3 times book was around here. Let's say 40. Round it off. There you go. $40 a share. That's like fair value. Anybody who thinks otherwise, okay. We'll fight. We'll fight to that. Did I say 5x, right? Hold on. Let me just do the math real quick. I'll read the chat in a minute, you guys. Times 5. What's that? Wait, why am I? What the heck? Okay, so that's 33 billion. And then divided by the fully diluted. Okay. That's assuming that every convertible bond holder gets to convert all of the shares. That's $63. Okay. Because remember, it's in billions, right? So what is that? Let's do that. 1 billion. That's $63. So yeah. So this level is 5 times book. This level is 3 times book. A little bit over than 3 times book. And this is 2 times book, right? See that? I should do the math before I come out here. So times let's do 2 times. Downloaded. 25. So a little bit over the 2 times book. Okay. 25 is 2 times book. Okay, but anyway, so this is say 2.5 times book. This is 3 times book. This is 4 times book. Huh? All right. So price reference. So according to me, anything under 63 is fair game. Okay. According to perhaps, I don't know, Warren Buffett. I don't know, or whatever fair value is. Then anything under 40 is great. And then according to the bondholder, anything under 30 is great. So, and who typically buy bonds, you guys? It's like institution, right? So keep in mind, people are repricing GME as we speak. And you and I have been out here for a long time. So you've known that GME has been undervalued and nobody's willing to give the fair value at the moment because they've been mispricing GME for decades. And so they're gonna have to chase now. They are the one who's gonna have to chase. We're not. We're just here chilling, okay, accumulating as much as we can because we know what this is. And yeah, I mean, go ahead, place your bet. If you think it's coming down from here, all right, good luck. Good luck. I don't know. It might, though. I was wrong here, so you might make $1 billion shorting this. So go ahead, place your bet. Okay. Hey, because I can. Yes, I saw that one. 2 times. Yes. So I saw that one. Oh my goodness. Like too much reading because I can. What the heck? My brain doesn't work with words. No. Send me numbers though. Send me numbers. Just give me, okay, how many times book is that? What price should I buy in? And all that stuff. But yeah, I'll take a look at it. I just took a quick peek at it, I was like, oh my goodness, too many words. Thank you though for that. Okay, what is this? 10x? Oh, 10 times. Okay, all right. Ice cream, welcome. Aiden, what's up? What's up? Haven't seen you in a while. Have you been here before? I don't know. Did I recognize you? What's up, Kada? Is the moon as a destination? Of course. In 10 years, maybe? I don't know. Yeah, so the volatility is going to kick in. Of course, people are expecting that a lot. We are expecting it as well. We know that Roaring Kitty is kind of lurking about again. We know that he has to. Come on. Like everybody's seeing this, and I'm sure institutions are also aware of this as well. That, you know, the trend is going the other way. Because you see this type of thing, right? Like, look, beat on EPS. And EPS is much more important than the top line revenue. Remember, it used to be the bottom line is what matters to the company. And for some reason, within the last few decades, it's been flipped. What matters is the top line revenue. If you could expand, if you could buy more, if you could borrow more, if you could whatever, why? And you have to understand, you have to ask yourself why that particular metric kind of get flipped on its head. And I think there's a reason why. And we know that. We know that, guys. Moritz, what's up? Thank you so much for joining. But speaking of Moritz, like I'm sure the private equity angle has to do with this type of thing. Remember, who teach you how to, or who teach these people how to evaluate the company? Yeah, the people that is up top. Perhaps they have been kind of changed the metric, somehow, so that, they could teach the financial advisor out there to advise you to do the incorrect things. The educational system is very important, right? And that's probably explain why we don't teach high school kids to take care of their money, right? I don't remember learning about this when I was in high school, right? And so the point is that the ruler in which they tells you to use to evaluate the company is not correct. And you see why, right? Because they only care about expansion. And expansion means that you have to borrow. And who are you borrowing it from? Them. Of course, they want you to borrow from them at 10%, 15%, 30%, if you're desperate enough, right? And of course, when you try to save your business, what do? You become desperate. You're like, okay, any amount of money would be work. I don't care if I have to cut my leg off, right? When the best thing to do is not to expand, it's to cut. Yes, it's difficult to grow, but if you could do it sensible, and you have people behind it, which is shareholders who understand the long-term perspective of things, you'll be fine. I mean, amazing, right? That GME could do this, leadership could do this, and they have not gotten enough credit for that. But now, slowly, begin to see slowly how institution now gonna have to look into GameStop as a big contender, as a big competitor to any other stock out there that has been, evaluated incorrectly. Okay, the top line revenue versus bottom line. Which one is better? Would you rather make money or losing money expanding on the top line revenue? It's a no-brainer, you guys. Keep it simple. Don't be stupid. Okay, be smart. I know. A lot of people would love us to be the stupid one. Okay, it's okay. It's life. Sometimes you just get misunderstood, and then eventually they're gonna come around. Let them take their time. The more time they get, the more the more enticing it is for people to come to this company. And again, by that time, I hope for them that it's going to be cheap enough for them, right? I'm telling you, volatility is a gift. It's a gift to us. You know why? Because now people are just like pricing it, buying and selling, and they're like, oh, should it be like $60 or $15? And then it's just calibrating over time. You're gonna get people buy and sell to to become the price that we thought it's going to be. And because of the nature of how this stock has been traded for the last 4 or 5 years, we know how explosive those type of uh, you know uh, volume could come to this company. Because when people are not paying attention for so long, and all of a sudden they see it in the news again, they're gonna flock in. I'm telling you, the flock in type is what we're looking for. What happened over here? People were flocking in. People were like, oh, the news tells me this. Oh, maybe I'll just buy a couple shares here and there, right? Even over here, $100, I just dropped right there, $400 or whatever, right? It's like, I have $400 on my account, so let's just throw in there. So everybody's just like throwing, mindlessly without even thinking. And of course, like I watched this happen too. I wasn't here then. I bought somewhere around here. I think my prediction was that okay, it's been kind of trending down. If they hit this trend line, it's going to be like that. Remember the trading mentality? But I bought over here, thinking that it was going to go up, right? But again, hey, no harm, no foul. That's why now I have my cost average is 34. But it's okay, coming from AMC too, right? I took some profit from there. Thank goodness, I got out of that. And I explained it earlier about apes and all that stuff. That was the last straw. And so yeah, so now I'm here, chilling, back holding happily, for people to reprice my Jimmy share. And of course, yes, it's gonna be more to come. Obviously, if they keep it this low, and anything below 63, I'm just gonna continue to buy the same rate. And anything above that, of course, slow buy. I mean, if I have some money over the year, I'm gonna continue to add to that Roth account. Now, hopefully, if it spikes, right, of course, I'm gonna shave some of my position, but I would never ever shave the whole position out because I don't know how far this is gonna go. I don't want to be the one that miss out on the biggest run in the history of the stock market here. Now, will they let it happen the same way as it was before? I don't know, you guys. Anything could happen, but I feel like the global money supply is enough sufficient for people to be happy with the gain that they're gonna get. My point is that don't get greedy. Just if you're long term, hold whenever you can. But if you're thinking about like shaving some, don't be hesitant either. I'm not the one to hold to the moon hundreds of thousands of dollars a share here. Let's be realistic. By that time, everything might not be there. But of course, like the force buying is real. This institution have a lot of tools in their back in order to, you know, uh, in order to combat this. Okay, so with the Federal Reserve as a backstop, of course they're going to print more. And I showed you a video yesterday about $2 trillion is about slushing. And how do I know? Well, if you look at the global money surprise, right? You could see that the money is already here, slushing around. I think I showed you guys that before. M2. 2M. It's like, I feel like I'm dyslexia, you guys. Like, I always do that. Find it not. Right here. I think this is like the US. But yeah, so look, it's perked up again. Boom, just like recently. Now, this is just the US, okay? And imagine every central bank have the same trick in their sleeve. That's it. Just printing more money, who cares, right? And so if you look at that one, it's like way up here already. So the total amount of money all around, okay, all around the world is slushing. And so no wonder Bitcoin going up in price. Why? Because every single government print the freaking money. Okay, but anyway, sorry. I don't know why I'm so aggressive all of a sudden. Sorry, let me just tame myself here. Reporting on that. Okay, thank you. What's your position in? I show already, so go look it up. I don't know. If you don't follow the show, I'm sorry. You gotta be here every day, reporting attendance. So you should know what's my position is. So should I ban you? I don't know. And I'm drunk on my power around here, so be careful what you say. Oh, okay. Um, I know, right? That's a lie, then you should know. Okay, let me see. $2 trillion to Bala. Yeah. I mean, again, they have connection, right? That's what connection is all about, I guess, So you could commit crime and be okay with that. I mean, can you imagine if we get to print money like that? Of course, we're gonna live our life, right, without any repercussion. But again, this is the system that they are building for themselves. And so long as we don't understand the system and try to get out of it, how can you get out of it when the only thing right now that young people have is to out invest or at least think of a better way? And again, that's why blockchain exists, you guys. That's why Bitcoin got invented, was to mitigate this inflationary to the max of no return. At some point, how many more trillion do you need in the market in order to, like, quadrillion? Eventually, we're going to talk about quadrillion, you guys. Like, do you even fathom what a quadrillions of dollars is? And you've already heard that number slushing around already with XRP Ledger, right? That, like, the derivative markets in and of itself. And again, that's why XRP is so big, right? In my opinion. Of course, do your own research, please. I'm not trying to advocate anything. If you get into anything, please do your own research. It's the derivative point of view. Like, the bets on the bets, bet on the, call option swaps and all that stuff. It's quadrillions of dollars. And for some reason, the whole planet is strangled because there's not enough money to even cover those, in the world. No wonder they have to. No wonder it's 2% a year. And they're trying to keep a lid on that too. And eventually they're going to be saying, you know what, 2% a year is not enough. Let's do 3% a year. Why do you think they're trying to get you accustomed to that? It's like, oh, you know what? Yeah, the change in Jerome Powell's speech, if I want you to really pay attention, because it used to be, oh, our target is under 2, but yeah, we might slightly, overshoot that sometimes, but, and then now it's like, well, that's not our mandate. Our mandate is maximum employee and price stability. So no longer keeping a lid on inflation. It's like, okay. It's like at some point, like you gotta, follow these type of leader heads, and you understand, figure out, okay, what are they trying to do here? And the answer is always make more money. Okay. Let me join you. Make me a mod. Oh, okay. Oh, I've never learned how to do that. How do I make you a mod? See, oh, here we go. Add as, is that it? There you go. Which one do you want to be? Standard. Okay. What is this? All right, all right, all right. Boom. Done. You have been bestowed. I don't know, what is it, bestowed? What's the queen say? I don't know. What is that? The knight thing? There you go. Test. All right, you got it, sir. Thank you. I will keep an eye on you too, though. You could get demoted as well, so behave yourself. All right, KCR. Thank you for the stream. I'm listening and work around. Okay. Well, at least you're more productive than me. I feel like I should be cleaning my house right now. But that's not as fun, right? Talking. Quadrillion will be, of course, we're gonna get some of that money. Well, I'm shooting for 1 trillion for now, because that seems like a good fair amount for the amount of time. Okay. Okay. How did they get there? Of course, of course. I know. I'm just, uh, just to set some rules, okay? Because I can't, sometimes people get wild, You can't trust anyone. Okay. Oh snap. All right. Yes. So behave yourself, you guys, okay? Any comments that is off-putting, you're done. You're done. Okay. Okay, where am I at? It's like, what is this? You guys, like, I'm getting too distracted. But anyway, so global M2 money supply has been slushing around already. That's why, stock market is not going down until this type of thing. And for people to like just, running with the head, it's like, oh my gosh, it's gonna be the greatest depression of all time. It's like, okay, calm down. Not yet. Maybe later on, but not yet. Too much money slushing around, you guys. So you you cannot not be in the market right now. Okay, so let's kind of I saw this post. I was like, oh, amazing take, and we've been saying this for quite some time. I'm like, okay, so institution keep buying, insider keep buying, CEO buying, no debt, billions of dollars, quarter to quarters, up and to the right. My stream, right? Shout out to Marantz, the best phrase ever made in history of the live stream ever. And then you have what's next, okay? A massive announcement. Oof, what is the announcement we're expecting? Of course, Bitcoin, right? Like I said, if he, like perfection in buying the dip, which is around 70,000. Okay, let's look at. The perfect timing was after tariffs. Remember I told you. So hopefully Ryan listened to me. Establishing around here. When is, let's look at the April 1st right there. Right here, right? April 2nd, April 1st. So somewhere in that middle, that would be perfect. But even more perfect would be around here, right? So that would be a smarter move. Maybe he was waiting on this on this bounce over here. It's perfect. Look, like mathematic or something. Like, you know, that's why, again, like you could always be sure that Bitcoin is here to stay. And you've had so many, you guys, so many good news, that comes with this blockchain technology. And I think there's, of course, it's been planned. You guys, everything that you see is not a coincidence. Yes, institution has already been kind of privy to um, uh, this technology for decades, and they've been kind of building quietly when you're not looking. And of course, they're trying to do their best, to confuse people, whether it's a scam, whether it's like, that's why meme coin exists, so that, people lose money in meme coin, and they could say, hey, so and so lose money on the news, so that most people get scared of that and not really even taking a look at that as the technology that could be useful for the next, decades, so that they could build quietly and accumulate quietly. So now when they done accumulating, Bitcoin at whatever price, they don't care how expensive it is. All they care about is buying at the relatively cheap price at that time, at that point in time, so that they could sell it to you at a higher price. The same thing with the company, okay? Nvidia, I'm sure they've been, accumulating, or that's their biggest bag. That's why they've been pumping it to offset whatever, right? Who knows? There's a connection with Citadel and Susquehanna. Remember, Citadel sold a portion of their hedge fund or whatever. I don't remember which one, but they sold a portion of their company to somebody who hold the maximum, like the most Nvidia. I didn't do that. I'm waiting for Marantz to do that, connect the dots, because he do it much better than me. I can't even explain the connection, but I could see that, and so I don't know. I can't prove the connection that it's because they bought Citadel, a portion of Citadel. Now the biggest holding, which is Nvidia, just exploded up in price. You think that's a coincidence? I don't think so. But anyway, I have no proof though. So it's just my observation to see. For anyone to see, actually. Anyway. And then, of course, like the mainstream media has been scrambling too. So there you go. Melting, melting face pump. Retail, stampeding, of course, Ryan Cohen. Then that's what we're waiting for, Rowan Kitty to do his YOLO update. And then, I mean, can you imagine if he comes out here and he owned 10% now? Oh, Jimmy. Oh, goodness. The internet would explode, right? But again, like how can he amass that? He could be using leverage as well. Maybe that's the whole spiel here. It's that, when you have billions and billions or hundreds of millions of dollars, you could leverage. You could ask to lever your position, and for some reason the bank would be so like the rushing into giving you money. It's like, okay, here, $10 billion more. It's like, okay. Who said that? I think it was the Martin guy, the guy who Marantz just decimated. The pharmacy guy, I forgot now. I'm sure you guys know. Like, somebody, please tell me who. Not Chris Martin. What his face? But anyway, that guy who was like boasting, boasting about how the bank are so stupid. Sometimes they just like giving you money. Like, if you want to borrow $1 billion, all you have to do is just tell them that you're gonna make something. They Martin Scorelli or whatever. Yeah, they were boasting how, some inside information across the But the bank would just like lending you out billions of dollars with no checking to see whether you could return the money or not. Um, and so you think Roy Kitty with the reputation that he has, he couldn't borrow $1 billion right now with hundreds of billions of dollars that he have? Of course. Well, hundreds of billions, sorry. Hundreds of millions of dollars he has. And so people would stampede to give him money to, get the returns. Not to say that he's colluding or anything like that. It's just that, people who have that type of ability, they gain some notoriety here. So yeah, I wouldn't surprise that people would contact him everywhere to work for them. Again, to earn money, right? Earning yield was the whole point. But anyway, so that's my speculation on Roy and Kitty getting 10%. Okay, so and then of course, yeah, I mean, people are gonna panic, and then what happened? Financial Armageddon. But again, this is like doom and gloom type of prediction here. I don't want to go there because I have no idea what's going to happen, or it may not happen. Right? I mean, that's also possible too. That we're just gonna continue trading based on fundamental, which is also a great thing. Like, I know it's lower than most people would expect. I get that. Rome is not built in one day. So just keep in mind, we're here for a long term. Our CEO is here for a long term. You remember we post a very old picture of him, like, reference on Warren Buffett style of investing, reference on Carl Icahn style of investing. So he combined the two. He combined the long-term point of view and going into companies that people doesn't want and make it happen yourself. That's a good model, you guys, because not many people, looked into those type of companies. So perhaps that's the replication model that he's going to try to get. And so any companies that is in shamble right now that has a viability of moving forward, of course, he's going to assess all the businesses out there that the maximum ability, have the potential, okay, of turning around based on the market, based on the industry in which they're in, what niche that we could tackle on next. So now we're just tackling on gaming collectible type of niche. So what to say is that in the future we can't tackle on other niche group as well. And where? We don't know yet, right? We don't know what markets we're going to be able to get into next. So it's okay. The same way with Amazon, okay? I mean, Amazon takes their sweet time, building the infrastructure that lasts for decades, and they're okay. They're okay walking to it. Just like Moran's was saying, we're walking to the promised land. We don't have to run. We don't have to sprint. Okay? And yes, sometimes we can by adding some amazing, asset onto our balance sheets. Bitcoin. Hey, hello. So we have so many flavors in this company, you guys. Like, it's something for everyone. Something for everyone. So come in, welcome. You're welcome to the most exciting stock ever in your whole life. Okay. So you're living in the best time ever. But anyway, so Bitcoin's going up. Okay, all right. So that is happening. So let me go to my post here. Okay, so MicroStrategy, of course, this is, it's worth listening to because, well, this is more like about a use case for Bitcoin that people might not even kind of think about. Okay, so let's listen in.
I had $1 million in a bank in Argentina 20 years ago. It was in US dollars. The peso was 1 to the dollar. The Argentine government sent a memo to the banks, forcibly converted everybody's dollars to pesos, and then forcibly devalued the peso 10 for 1. And I woke up the next morning and I had $100,000. I had $1 million the day before. They stole 90% of all the currency from everybody in the country overnight on a fax, without a law, without an army. Now, how hard would it be to take all of the property or of everybody in the country with Bitcoin? You have to go arrest 60 million people, sweat them all in a jail for 90 days. How do you arrest 60 million people and sweat them in jail for 90 days? It's like 1 billion times harder.
Yeah. So assuming that the seed phrase that you have is not exposed online somewhere where they could hack it, okay? That's assuming that people are smart enough not to sell, not to keep their keys to their wallet online. That's the whole point. That's why you have like cold wallet, hot wallet, and all that stuff. That's for you to do research on your own, because again, this is a responsibility if you want to hold your own Bitcoin, and be sure that, you know, when you need it, you're going to be able to access it. And to me, again, this is why Bitcoin is such a interesting asset class to at least, you know, educate yourself on, because of the freedom aspect of it. Okay, I know that within the digital world, it's a learning curve that you have to be becoming more technologically advanced, or at least just kept up with what is safe, you know, cybersecurity and all that stuff. Yes, those type of things will happen, but you know, if you know how to keep your Bitcoin safe, and I'm hoping that you know, Ryan Cohen is well aware of that risk, and understand that, you know, self-custody is the best way to go, because you don't have any counterparty risk, because you have that in your own possession. And you know, with the institutional grade now that XRP is trying to implement, you know, they're building a railway for people to get into crypto. Just think about you know, XRP to me, it's like a you know, the train track, you know, without the track, you know, trail or whatever being laid on the ground, how can the train go anywhere? And so think of XRP as that, like a roadway, a road to wherever you want to go. And so with that, you need an infrastructure that will move from fiat, okay, to digital, wherever. You know, you could get from XRP to any other asset you want. And of course, this is what the value proposition for XRP is. And that's why you hear about the price action going so stupid, right? Because with all of the money in the world, all of the tokenization that is about to happen, and again, I'm talking about like 10 years from now, okay, you guys? I'm not talking about right now. Now it's just the excitement of people like, okay, speculation of what is the price, right? The volatility comes from that. But when everything is built, the volatility would be gone. And then you'll be paying premium for that stability. The same way with GameStop as well. The reason why you see the price action going crazy is because of the volatility, because people don't know how to price GME. But in 10 years, because now they have the balance sheet to prove to you they're stable, they're good to go, they're understanding what market and 10 years from now, you're not going to see this volatility. It's going to be traded like Apple. Okay? And that's why Morans talk about the blue chip. Yes, eventually we're going to become the blue chip. But that's 10 years from now. Okay? That people are going to pay premium. Whatever premium it is, I don't know. I don't claim to know what the price of GME is. I don't claim to know what the price of XRP is. I don't claim to know what the price of Bitcoin is. I just know that it's going to be up from here. Okay, if you accumulate for the long term, decades on end, doesn't matter what security is, just make sure that it's going to be there in 10 years. That's your job right now. Okay. And yeah, follow it, follow the development that happens and understand what you're getting yourself into. And this is another angle that you have to understand too, where yes, come technologies, right? There's a level of trackability here that, we're trying to fight for. Hopefully we understand the freedom to transact. And again, this is why I feel like sometimes those information about Bitcoin is kind of skewed, because Bitcoin is proof of work, right? And it's a technology that you cannot break. But certain other technology like XRP, you could program it. I'm not talking about the ledger itself, but the companies that run on the XRP ledger could really, have their own property. So, and other chain as well. So this gentleman's gonna explain.
Cryptocurrencies, in terms of native cryptos like XRP, Bitcoin, Ethereum, they're not all the same, right? They're not all created equal. I think what's becoming much more popular in the industry now is more sustainable technologies. So the XRP ledger and XRP is, there's no mining or proof of work or proof of stake involved. So the computational cost of validating transactions is almost zero, right? Very, very low cost and very stable in terms of pricing. Stable coins, again, not all created equal. You have a massive range from the algorithmic type stable coins. We all know the Terra story from a few weeks ago. And then now what we're seeing emerging is, stable coins being issued by regulated entities. So I can't give you the names yet, but there's two projects we're working on, one in the UK and one in the US, working with banks that are regulated, who will be issuing stablecoins, and the reserves will likely to be held at a central bank in a central bank account. So very different from the algorithmic stablecoin. We as Ripple work across all of these technologies. And then, of course, you've got central bank digital currencies, which essentially is the highest form of digital currency, right? Issued by the central bank, backed by the central bank, the most secure form. As a company who's working across the payment space, we're embracing all of these. And we see they will all play their part in the future of money. Today, cryptocurrency is less than 1% of all the money. Central bank money is less than 10%. The rest is all commercial bank money. So it'll be interesting to see, in 5 or 10 years, how does that look when it's all digitized? Will stablecoins be 90% of the market and CBDCs 10%? Or will CBDCs actually be allowed to grow and be a much higher percentage of the money supply? I don't know. That's for the policymakers to decide.
So as human being, as people, we have the ability to pick which one is the best for freedom. So that's why, again, having these type of technology building in America is what we want, right? And Scott Besson understands this, you guys. I'm telling you, that's why I follow Scott Besson a lot, because I know, from passing, like, a couple of years ago, before he even become a treasury. Somebody mentioned him, but anyway, like in passing, it's like, and I was like, oh, I recognize this guy's name, because he was, kind of pro Bitcoin and all that stuff. So I kind of like, oh, okay, this is cool. And so that's why I'm like, okay, so what is he trying to do right now? And he said it in the most recent speech, that he's gonna try to get blockchain to be the innovation that will at least hoping to solve this debt problem that we have in America. Of course, is it going to be successful? I don't know, but I feel like, this is the industry that you want to stay here, so that you would be the one who write the rules for the world to follow. Would you rather be the one to write the rules, or to follow somebody else's rule, which is the central bank digital currency? A European somewhere who does, you didn't even get to elect, right? And so this is the opportunity that you should not have other country. I mean, can you imagine following the rule for China, from China? you know, with a different type of government that you might not even want to follow, okay, or have the right to follow. You just have to like, survive based on that. No, you don't want that. But anyway, so this is the global money supply. It's even perked higher than the U.S. money supply. And so that's why, again, this is the price of Bitcoin. People kind of like expecting it to come down. Of course, I wish I know this before that. I would have like sold some Bitcoin here and then come them back. But I didn't have Bitcoin back then, so I wasn't. But I was accumulating here. It's like, okay, it's pretty good time before when Ryan Cohen post, remember, a couple of weeks. I kind of like so my average is like 83 right now. So but anyway, so I'm gonna slowly accumulating now until May, I think May 1st, and then we'll be fully in. I don't know. I mean, Bitcoin, of course, I don't think it's gonna grow faster than XRP. That's why I'm at majority now in XRP in my crypto portfolio. But we'll see, but eventually I want to kind of store my, wealth in Bitcoin, of course, right? That's what you're supposed to do. Because, hey, if one Bitcoin goes up to $10 million, right, you don't want to get screwed, right? And I've learned my lesson, obviously, had I, hold my Bitcoin for a long term, decades on end, I would not, be too worried about when my next paycheck is, right? So, and of course, this is also another chain. Now, remember, Trump gave you 5 coins to pay attention to, okay? So if you trust him to do the best for your portfolio, then at least learn about those 5 coins, okay? Bitcoin, Ethereum, XRP, Solana, and ADA, okay? So there you go.
Midnight was very well received, and there's a great degree of excitement there. And we think it's going to bring millions of users into the Cardano ecosystem. And the concept of hybrid applications, whether they be Bitcoin to midnight, Ethereum to midnight, Solana to midnight, or Cardano to midnight, is a net positive for the space as a whole. Midnight.
So Cardano, I've had, I sold to. Like, can you imagine? Like, you see what I mean? Like, when you're short-term minded. I bought a lot of ADA when it was 10 cents. But then I was happy with 12 cents and I sold at 12, right? And I was like, okay, I made it in this world, right? But again, back then I didn't have that much money, you guys. So it was just, a couple $100 here and there. And, jumping back and forth from one coin to another and just trying to play. I was just like, again, to me, it's more learning about this type of technology because I know it was going to be kind of, okay, there's something here, right? To learn about, at least the transaction point of view type thing. And so back then I was like, okay, let me just buy some ADA. What is this ADA thing? So I have, ever since I sold off of it, I didn't even, pay attention to it more until now. Now I get to, it's like, okay, now. You see what I mean? So at some point, people are going to do the same thing with GME too. Like, people are going to forget about GME for a while and then they're like, what? GME's back again? The same exact thing, right? Because again, GME is going to keep building their balance sheets and business slowly and maturely. And if you continue to do that, of course, your company is going to be around forever until people, stop not paying attention to you. The same way with this type of chain, because they're here for the long haul, decades on end here. And so I'm so happy now I have more ADA. So I'm going to continue to accumulate those two. Now this one, of course, Michael Saylor make this 1 year comparison. and then somebody else did GME. Of course, GME is much better performing than MicroStrategy. And so I think within this 4 years, GME is going to be taking over MicroStrategy if they employ Bitcoin, right? Of course, these two are going to continue to go up. And I feel like with Brian Cohen, right? I feel like he's probably better at timing it than seller. I don't think we're gonna continue to buy at every level. Yes, and also too, the verbiage is that we're gonna sell Bitcoin too. We're not gonna be long term hold. So I'm sure he know when to sell too. So perhaps again, it's probably just as easy as following the global money supply. Like, can you imagine if it's that simple? And then people are like, nah, I couldn't be that simple, right? There'll be people like that too. So we'll see. If this chart is correct, so I think each line is 1 month. By May, end of May, you're going to see all-time high for Bitcoin. And of course, by end of May, you're going to see altcoin even go crazier than that. And, ADA, XRP, and all that stuff gonna become one of the coins that might even take over in terms of percentage. I'm not talking about dollar. So the more coins you have on the other, the better. And of course, Ethereum's gonna trail behind too. XRP want to beat Ethereum, and I think we're gonna take over Ethereum. This will. XRP is gonna take over Ethereum. And this one is Brad Garlinghouse, which is Ripple. So again, Ripple is a company, okay, that use or going to use the XRP ledger to assist in that transaction. Tap in that value that they have in the global market of crypto. Okay, this is in the crypto world yet. So nothing has been developed quite yet. That's why you see the burn rate is not that enticing at the moment, because it's going to take 50,000 a year for you to burn the whole ledger out. Again, the whole token. So 50,000 years, not a human years at all. But if there's more people using the technology, right? And if it's going to be globally, just using it as a point of transacting. Because every time you transact, a small little tiny portion of XRP going to be burned. And that's why, it's not going to be existing at all. So it's deflationary, but the deflationary rate it's negligible at the moment. So what I'm tracking is that how many tokens going to be burned when that kicks in. Okay. So yeah, tune in for that. Tune in. Let's see. So of course the new SEC already sworn in, and of course the speculation is that he's pro crypto, pro keeping this industry here to build at home in the US. And so perhaps again, the lawsuit's already done, meaning like there's settlement already. But I think, to have a clarity, the regulation moving forward, it's going to be the one that we want to wait for. And once the company or any people, right? Again, this is good for everyone. I'm not just the XRP ledger here. For any company to build on anything, they need clarity. Okay, when the regulation hits, and they know, okay, you're not allowed to do this. You're allowed to do this. This is the security. This is a commodity. If you do this to your, token, that means commodity. Don't do that. Certain rule guidelines or whatever. Then GME, Gamestop as a company could then build a platform that, according to the regulation, without fear of, shutting down. in the near future. Okay, so that's coming, you guys. You think Ryan Cohen just go into Bitcoin just to go into Bitcoin? Say, goodness, I don't understand these people sometimes. Like, just copying MicroStrategy. These people, I don't know. Anyway, why am I so irritated all of a sudden? Can you imagine that? Okay, so of course, people were speculating that China was dumping treasury, right? But of course, we know what's happening too with the base trade. People need to sell their collateral in order to whatever, but then we dump. So they dump treasury to buy into gold, but we're gonna dump gold to buy into Bitcoin, right? So which one is more pristine? I think Bitcoin is going to be more pristine. Because treasury lost in price too. I mean, think about it. If the safest collateral in the world right now dips in price, then Bitcoin is going to be superior. That's why I said Bitcoin is going to be the collateral, pristine collateral that the world is going to want. And it's setting up to be that. In 20 years, you're going to see a different world, you guys, I'm telling you. And it's nice to pick the company that is in the forefront of that and get to benefit from that. In not even 20 years, within less than a decade, I feel, even just this end of this year alone, you're going to see some stupid amount of, surge in this industry here. Of course, I have XLM2. A lot of development there. I think I showed you this, guys, already. Yeah. So with that one, now let's go back to this real quick. This is the one that I was describing.
There's a lot of right answers for how much Bitcoin you should have, but I think that if anyone who looks into it generally finds that the zero is not one of the right answers. So I think get off zero. There's some research that shows basically the more someone is knowledgeable about Bitcoin, the larger share of the net worth it ends up being. So my general view is that if there's a time where it makes sense for you to increase your holdings substantially, I'm not the one that tells you that. You're the one that figures it out for yourself and decides that your level of understanding or comfort with the asset has increased, and therefore a larger position might be right for you.
You guys, I just realized something. I don't even show my screen. The whole show, you've been listening to me. What's the point of me showing your screen? Oh my goodness. The calamity. I don't know, you guys. Nobody. This really proves to me that people don't even look at my show. I might just make it a podcast, No, not one person say, you know what? Anymore, you didn't show the screen. I didn't see anything. Yeah, you guys. It's okay though. You could go look it up later on my Twitter page here or X, account. But yeah, so everything was on X account. I don't know why I put this guy here. Give me 1 second here. I'm looking for the one. Oh, SDR Star Galloway. There you go. I think this one here. No, not that one. MSTR. Okay. That's how good job. Wow, thank you so much. That's a compliment. Okay, you're turning a bad situation into a compliment. Love it, love it. Now, this is what a cult is all about, right? Like, no matter what I do, just do it. Who cares? Oh my goodness. of course, now I'm ready to end my show already, you know? I do have to leave like in about 30 minutes here though. You have your own style. Thank you. Okay. I'll be used to it by now. What? Okay, I'll be better though next time. Next time. Okay, so let's listen in. This one here.
Today's number
was a. Hold on. Okay, this is a segment of MicroStrategy about 4 months ago, and this is before all of the valuation and all that stuff, money raising from convertible bond. But convertible bond happened before that. But this show was 4 months ago, so things might change. But I think this is kind of telling of the strategy. I don't think strategy has changed their tune yet about Bitcoin, except the most recent one where they said, oh, they might have to sell some Bitcoin. But this is worth kind of like looking into. Forward looking. Perhaps if Jimmy would try to copy the strategy, what happened?
I'll start with this and we'll get into it. But what has drawn you to Bitcoin, Michael? And what was sort of the impetus for this very radical pivot at MicroStrategy towards Bitcoin?
I think in the middle of 2000, in the summer of 2000, what drew us to Bitcoin was desperation and frustration. So initially we had 500 million in cash. It was worthless. Like it was generating 0% interest. The company wasn't growing. We were under lockdowns, competing against Microsoft. So, the only thing that we had in our world that was a bright spot was we had 500 million in cash and we thought maybe it was worth something. But when Jerome Powell said it's worthless for the next 4 years, we lost that, So we had to do something. Our initial, foray into Bitcoin was defensive, or it's just frustration, defense. It's either that or sell the company. So if you're not going to sell the company, you can die slowly, you can die quickly, or you can do a transformational acquisition. You can take a risk. And that was our transformational acquisition. What if you could buy a $500 million company growing 60% a year, which looks like its own digital monopoly, and you could bolt it on to a company that's growing not, 0 to 5% a year, that's not a monopoly. So we did that. Then Bitcoin surged, and we could opportunistically raise money via the convertible bond market, and we raised 650 million at 75 basis points. And then we raised $1 billion paying 0% coupon. And that point, I would say that stage is opportunistic. Like someone wants to give you billions of dollars of free money to actually invest in your business. Why wouldn't you? We got on the roller coaster and went up and down.
Oh my goodness, thank you. Almost about to go like 10 minutes without microphone. Thank you, Michael. Appreciate you. So what I was saying here is that people are gonna conflate the fact that GME is the dying company that needs Bitcoin to survive. Okay, but I want to be clear right now where GME does not need Bitcoin to survive. Okay, the reason why, GME doesn't need Bitcoin to survive because we've been surviving without Bitcoin for the last 3 years. We don't need Bitcoin to survive. Okay, we've already demonstrated that, or thrive. We need Bitcoin to grow. Okay, so when people are telling me, is that GME is not growing. Okay, so this is the stage in which we're in right now. Well, we're in the growth stage. So get ready for it. So this is the growth that you want, that people are complaining for 4 years that we're not growing. And this is not a bad thing, you guys. Like when they're telling you that, oh, going to Bitcoin, it's just going to be, bringing the company. No, this is the right time to get into Bitcoin. Doesn't matter what they're telling, but the result will let you know. And I'm not talking about the price action, you guys. Like I said, like you have to separate the two, okay? Price action will do whatever it needs to do. But the company itself is going to grow the balance sheet to however high it could go, okay? Whether using the strategy or whatever. But this is the point that I want to kind of make clear. And so that's why I think that Jimmy could beat MicroStrategy, because not only that we have the net income going higher, we have the ability to get into the S&P 500 even sooner than MicroStrategy. Can you imagine that? And so with this growth of the balance sheet using the convertible notes at a 0% interest, just like you said, if somebody were to give you free money to buy into an asset that grows 60% a year, you don't want to do that? Come on. You'd be stupid not to. But not every company could do this. What company balance sheets, like he was saying, when he first started, the first convertible note was $600 million. And how much did you think he has to sell the company for? A lot. Right? However many shares it was. Okay. For us, it's only 50 million shares? And people are like, wow, what do you mean only 50 million? What is 50 million share? 10%. Okay, if you could get 10% of your company, possibly, right? We have the ability to convert or not convert. But the bondholder had the ability to convert over $30, right? So, but in 5 years, right? Or in 3 years' time. So there's a condition in which when you're allowed, okay, to convert into shares. So if it's below $30, you're not allowed to convert. Okay, unless it's over $30, then you could convert. I'm not sure if the fact that you could convert anytime, or I have to look in that a little bit deeper. But the point is that, again, this is the growth state that people are asking for. And don't let the media kind of twist it so that, oh, look, they're copying MicroStrategy. It's a dying business, so that's why they need Bitcoin. Nah, don't be naive to think that, okay? Patient's like, yeah, Bitcoin needs us. Nah, Bitcoin doesn't need anyone. Bitcoin is just Bitcoin. Whoever needs it, they'll understand it later on. But it's not so much that, yes, it's going to be a symbiotic relationship for sure. Bitcoin cannot grow without, okay, Bitcoin will grow based on the money supply that is slushing around. So long as, these countries, central banks and all that stuff still devaluing the dollar, Bitcoins will continue to go up. And companies will need Bitcoin, yes, to grow, because you cannot grow in that environment if every turn that you make, let's say you make $1 million, $100 million this year, and then next year, the inflation level is 3, then, your money would be, if you leave it in money, right, it's going to be burning through inflation. And so company with tons of billions of dollars will have to find ways to grow more than 3% just to stay afloat, okay? Just to stay equal. And again, that's just an official inflation report. The inflation report is probably skewed as well. Maybe inflation is not 3. Maybe inflation is the double digit. Okay. No wonder why my insurance went up in 11% when they're telling me that inflation is at 1 this year. See what I mean? So again, like it doesn't match. And so, the metric in which they use to measure it and tells the public, it's like, oh, it's only 3%. Oh, it's coming down now. But it's adding up. Okay. I mean, if you compare the price from 4 years ago to now, it's close to double or triple already. Okay. Certain things that you buy, not talking about everything. Okay. What's going on? Is it like booming right now? Okay. Yeah. It's crawling back up. But yeah, so the supply shock and all that stuff, you have to understand. Okay, we'll go back to the.
It surged, it crashed, it surged, it crashed. And I think by the beginning of 2024, it became strategic. And we realized, like, hey, we're just doing this because we've got an operating company and we can do it. And between 2021 and 2024, we raised about $10 billion of capital. So we started with 500 million. We raised another 9.5 to 10 billion more. And now, now the question is, well, what's going to happen with crypto and what's going to happen with Bitcoin? And you got the ETFs approved in January. I mean, 2024 is like year 0 of institutional adoption. So the ETFs are approved in January. Everybody wrote us off and said, well, MicroStrategy is unnecessary now. What they didn't realize is the ETFs are like overnight deposits. Like you put money into BlackRock, but you can take it out of BlackRock the next day. MicroStrategy, that 40 billion, that's our money. That's permanent. You can't take it out. We have 40 billion of permanent capital. And so what we realize is our real great strategic franchise here is we can securitize Bitcoin. So I can issue fixed income instruments, bonds, especially bonds and fixed income preferred stocks or high volatility equity. And those are all products the capital market wants. They want Bitcoin-backed securities. They either want 3x to trade or they want 1/3 of the risk and 1/3 of the volatility to hold in a portfolio. So we announced October 30th that we were going to basically raise 21 billion of equity and debt, and that was well received by our shareholders. We just kind of said we're going to be the leader in the industry. If you want to invest in a company like ours, we're the company. And then a week later, we just had a red sweep, and November 5th was pro-crypto Congress, pro-crypto Senate, pro-crypto White House. Bitcoin surged, our stock surged. And I guess I boil it down to, it took us 4 years to get 10 billion. But by the way, it took me 30 years to get 500 million. It took me 4 years to get the next 10 billion. It took us 4 weeks to raise 13 billion more.
That's crazy, you guys. Do you see the time reference there? So that's the growth that Bitcoin can do to the company balance sheets. And again, balance sheets also is an important, starting point. And the fact that we get $1.5 billion in the first, in reference to 60. I mean, but the way that he was saying, it's like it took him 30 years to get 200 million or something. That's 30 years worth of work. And then because he did the right thing for his company, which is whatever. I mean, it's a matter of perspective, right? But the result show itself is the Bitcoin. Yes, you could say that it's hype. You could say that it's whatever, but it's a correct decision to do, as proven over the number that you could see. Doesn't matter what they sell you, you guys. If if you could sell it to people and people wants it, of course, that's the business, right? That's the business cycle. He's selling Bitcoin to his investor. People wants Bitcoin, and if they trade it in and out, the same way with what, Wall Street been doing for the last, what? They sold a company to you at a inflated price, and you just buy it because you think it's going to go higher, right? But you didn't realize that they bought it at $1, but they sell it to you at 10, right? Now, they don't mind if it goes up a little bit, like from 10 to 20, because they're happy with just 10x their money already, because they've been holding it for whatever, because they know that eventually the business is going to fluctuate and up and down, or worse, they knowingly selling you company that doesn't do anything, because they know that it's going to come crashing down, and then they buy it later on from you, right? So the same way, just think of Bitcoin as a commodity that people want to buy, and it's global, and so that's why you see the price fluctuation and the popularity that it brings to your stock. More eyes, more interaction, the more better. There's no such thing as a bad publicity. Remember that? Publicity is publicity, because people are gonna fight each other for the point of view that they have, and then eventually we're gonna prove it to be right. Okay, it's gonna take time for people to sort out their differences, but as long as GME is gonna be where it's at, have the same leadership, has the same cadence, ups and downs, but hopefully it's gonna up to the right, right? And that's the trend that we're gonna go into. Will it be parabolic? It could be, with the excitement, with the swaps, with the whatever, it can be. So to say that it cannot be a certain price point, it's an ignorant part of the discussion too. And I'm sure a lot of that excitement from MicroStrategy company comes from short as well. Can you imagine how many short position was in MicroStrategy? Because again, they were not making money, right? They were losing money and all that stuff, and then all of a sudden they add Bitcoin, the short scrambling, because so some of that price action was due to institution who was shorting it. Again, short squeeze, right? Hey, who knows? Yeah, there's not much money out there because they are printing so much and it lost its value. Of course. That's why Bitcoin and gold is going up. Of course, that's the function right there, just that alone, but also, the demand for Bitcoin as well because of the usability of it. You think about the utility of Bitcoin versus gold. Bitcoin is more useful, right? Because you could buy and sell anytime, any way, 24/7, okay? And you could carry it through the border much easier than gold, right? Just like it was explaining in the first one, first video.
And that's because the product you're selling is capital. I mean, you're selling a security. If a rich person looks at the iPhone, how many do you want? One. You want one Tesla, one iPhone. But if I offer you a security that gives you twice the performance of the S&P, how many of them do you want? Like yes. Until you hit your risk rail. So now I would say we're a Bitcoin treasury company, right? Where our operation is we take crude crypto capital, Bitcoin, that's a commodity, and then we sell you an equity which is like 2x Bitcoin. And then we get to 2x by actually selling bonds and selling fixed income instruments that are half x or half of what we're doing, and we strip the performance and the risk off the bottom of the capital structure. We put it onto the top, and that way all the degenerate traders get what they want, and all of the risk-averse investors get what they want, right? And we're just the institutional gateway sitting in the middle.
it sounds like the way that you're describing this stock now, I mean, MicroStrategy was a software company. The way you have described it, it sounds like MicroStrategy is a financial product. And the way that you describe that you are securitizing Bitcoin, which I would assume you see as maybe a commodity, but it sounds like the business that MicroStrategy is in now is selling a financial product.
We're a treasury company. Like we're not a retail bank. We don't have retail deposits. What we do is we issue securities. We borrow billions of dollars from the bond market at 0% interest, and we lend it to the crypto economy at 60% interest. You see, I raise money, I raise billions by issuing equity to the equity capital markets, and I invest it in Bitcoin. And the difference between them is a spread. If I issue $1 billion of equity, I'm capturing a 65% spread. We make $650 million on the arbitrage in one day. And then when I do the bond market, it's an 80% spread. So what we're doing is we're taking cheap capital from the traditional capital markets, of which there's 300 trillion of it, right? There's a lot of money in the capital markets. We're funneling that capital into the crypto economy, into the decentralized economy. It's like I'm lending it to the nation of Bitcoin, but there's no counterparty, right? Because there's no company, there's no individual. But I'm getting back 60% return each year.
So I think the 60% that he's talking about is on average. If you, of course, assuming that Bitcoin will go up at that rate every year. And it's like a straight line type thing. So let's see. The rate of change from its inception, I guess. When did he start to buy? It was like 2020, right? So 2020, right here somewhere. I think it was August 2020, around here somewhere. And then if you were to kind of like, so to him, every year, if you were to from top to bottom, right here, to the year, on average, obviously, some years are more than other. Like this year was 3x, right? This year was 50. So I think he's just averaging it like that. This year's down. And then this year up. There you go. So I think that's what he meant by like 60%. But if you were to draw the straight line, you could see that the trend is going to be up like that. Why did he say it was a cheap? Well, again, in relative, right? It's just the way that it is set up. I mean, stock to flow, it's a good model to look into. I showed this many times. So, but just in case, like somebody listening in, like, again, this is just mathematical, model that somebody came up with in the last, let's say, this, 400 days. I don't know why they come up with that one, but it seems like that line is pretty respected. Perhaps that's why they pick this number instead of a year. Okay. And so every 463 days, you could see that the amount of Bitcoin is going to be half. Okay. No more mining. Every people that are mining Bitcoin are mining less and less Bitcoin, and it will cut in half every 463 days. So a little bit, not, sorry. It will cut in half in, close to 4 years or so. Okay. I think it has to do with the block size, how many blocks are being mined and all that stuff, and how much difficulty it is and all that stuff. So mathematical, right? It goes up, like the difficulty of Bitcoin mining goes up. I mean, it gets checked every 10 minutes or something like that. So every 10 minutes, if it gets too easy, it's going to change, the difficulty of you getting that block to be in there. That's why it's so slow, well, compared to, other, chain, is that it's recheck itself. So it's a balance, like a way to keep the network safe, and that, no one person can accumulate large enough of Bitcoin supply to be, to take over the network. Okay. So again, that's why people who are, attest to this say that it's the most pristine type of technology, that no one has been able to break the chain yet. You think no one has been trying to break this chain? I mean, trillions of dollars here we're talking about. So yes, people are trying ways to, try to break this chain down, but like, good luck, try to, because miners are the one that keeps the networks spread out. And so the higher the price, the more secure the network will be, because the people that, benefit the most are the one who wants the secure network. So maybe that's why central banks is scared of Bitcoin, because you can't control it. It takes their power away to control the form of money. Right? Anyway, just my opinion. Do your own research. Who knows? You might find out who make Satoshi, who Satoshi Nakamoto is one day, and then zero. Bitcoin go to zero then.
And so as long as I can borrow the money for less, if you can borrow money for less than the S&P return, and if you can loan it out for more than the S&P return, you can rinse and repeat that trade ad infinitum, because there's infinite money that's getting less than the S&P that wants more.
A lot of that is predicated on the fact that you are borrowing money at 0% interest, which is very unusual. Could you take us through for our listeners how that is possible?
Okay, here's the big idea. The S&P volatility is the VIX. It's about 15. The return of the S&P for the past 4 years is about 15% annually. So think of the cost of capital for every traditional investor is 15 vol, 15 ARR. Bitcoin is 60 ARR, 60 vol. 4 times the VIX, 4 times the S&P. It's been that way for a decade. It's been that way for the past 4 years. Okay, if you're a convertible arbitrager, there's an entire convertible bond market. What they do is they buy your bond and they sell your equity and they extract the premium. For that, there's a $340 billion market that does that. For that trade to work, they need your vol to be 45 or more. So you need to be 3 or 4x the S&P. And of course, MicroStrategy's got a vol of 100 to 150. And that's because we lever Bitcoin, which is a vol of 60. So if I take 60 and I double it, I'm 120. So we have extremely high volatility. What else do you need? Liquidity. What else do you need? Durability, right? Gamestop's interesting, but it's not durable. You see, sometimes there are meme stocks that are very liquid and volatile, but only for a week. What if I could, volatility is like fire. I'm starting a fire, I'm burning the fire for a long time. So the way we borrow money for zero is we're selling a convertible bond, and the imputed interest rate of the bond, of course, is not zero. The arbitragers are getting 20, 30, 40% risk-free yield. They're betting nothing and getting, I mean, they might buy a $50 million bond, make $10 million in a few minutes, risk-free. Why wouldn't you?
So he mentioned GameStop as not stable. Perhaps back then, again, maybe this was where, Ryan Coe was like, oh yeah, you think that we're not stable? And that's probably the connection comes from. Like, okay, let me call you up and explain how great GME is. How dare you say that, right? And that's how the connection happened. I'm just speculating, you guys. But he had a point there, again, because the reason why GameStop doesn't hold its value, it's not because of what GameStop is as a company. it is because of the volatility. People are trading in and out the chain, option chain. People buying, selling calls and buying, selling puts at will, right? Minutes on end here we're talking about. And, with that volatility, you saw a spike of money just a couple months, and then when people lose their money, right? They're like, okay, now I have no money left. They have to go to work and come back with another set of money. Again, this is the gambler type, right? People are traders are like that, where sometimes they get the account blown off, for a period of time, and then they come back later to try to, win their luck again. Okay. And so that's why you see that price action doesn't sustain itself. Has nothing to do with the company. Okay.
So we're tapping that market because we have a volatile, liquid stock that's transparent. But and it doesn't require a zero coupon for this to work. We borrowed money at 6%. If you borrow money at 6% and invested it at 60%, you're still scraping 90% of the gain. I'm still making 54% yield on whatever I borrowed. So it works at 6%, it works at 12%, it works at 15%. It just happens that a very easy pool of capital is convertible bond capital, where you can borrow the money at zero and you can do it in size. Can I make one more point, which our bonds are the most lucrative bonds sold in the last decade, right? I mean, the bonds all doubled and tripled. No one ever triples their money on a bond normally. But the other point is, if a conventional company borrows $1 billion in the convertible bond market, and they go and they build a building, or they invest in a product, or they fund an operation, it's a 5-year investment cycle. And it's not clear how it will turn out. So after 5 years of developing $1 billion of Chicago real estate, you go back to the capital market, borrow another $1 billion, and you got to do it in San Francisco. Another 5 years goes by. But what we're doing is building a digital building. I borrow $1 billion, I buy Bitcoin, I announce it 2 days later. It's immediately profitable because I'm generating a yield to my common stock shareholders. So imagine I could borrow $1 billion, build a digital building in 5 days, announce that I made money on it, and borrow another $1 billion. I can do that every week. And that's exactly what's happening in this market. We're basically accelerating the investment cycle from 5 years to 1 week. Bitcoin is the unique radical actor here because Bitcoin is the first product that's a commodity. That's a legal definition, an asset without an issuer. And it's economically a scarcity. That is a common sense definition. It's a commodity that you can only make 21 million of for the next billion years. So there is no legal commodity that's also a scarcity other than Bitcoin. And if you don't have a commodity that's a scarcity, you can't do this with 100% of your capital in a public company. Yeah, like you can't do this with a security. Like I couldn't do this trade with NVIDIA stock. Even though it's a great company, NVIDIA stock is a security, so I could never own 100% of my liquid capital or have it invested in NVIDIA. So if you wanted to do this before Bitcoin, you had to do it with gold, soybeans, oil, or real estate. And they all underperform the S&P, and they all have less vol than the S&P. So if your hurdle rate is 15-15 and you're showing me real estate, which is 10-10, the trade doesn't work. And so what we're doing is totally rational and simple. It's the simplest thing imaginable if you accept the premise that Bitcoin is a real asset, that it is a commodity, and then it's 21 million, right? And once you get that idea, everything else follows naturally. And until you get that idea, you just think it's crazy magic.
So, Michael, it's always good to see you. And I should point out the first time we had you on the pod, you off mic said, Scott, just put some of your assets in this, trust me on this. And I think Bitcoin was like at $8,000. And I'm like, oh, I'm going to wait till it goes down to 4,000. So if I understand this correctly, it's sort of this incredibly deft capital markets arbitrage where you're able to issue zero coupon bonds where no cash flow leaves your balance sheet. You don't have to pay interest on this. So you get to borrow money not for free, but cash flow free. No cash flow comes off your balance sheet. And because of Bitcoin's acceleration and the vol you talked about, you're able to issue the price that the bonds convert out at a fairly high price. So you essentially are engaging in this kind of arbitrage where people think your company has the credibility in the space. You have the ability to borrow against this, but there has to be underlying cash flows to support the claim that those bondholders might have should Bitcoin go decline substantially in price. So is that security built on just a pure belief in Bitcoin, or are the underlying cash flows from your core business important to that?
The performance of the underlying asset is such that the bonds never get paid back other than they get equitized. And if you look at my situation right now, I have about $40 billion of Bitcoin. I have about $7 billion of bonds. 4.2 of them are already equity. I mean, they're already effectively equity because they're trading not just above the strike price, they're trading above the call price, which is 130% of the strike price. So we could, generally sometime in the future, just call them all for equity and equitize them all. So there's about $3 billion of a convertible bond on a $40 billion structure, which is zero coupon, which there's some theoretical risk that there might be more dilutive than the minimum strike. But the other point to make is these are no recourse unsecured notes. There's no lien, there's no claim, there's no EBITDA covenants. I think we paid like 30 to 35 million in interest on 7 billion in debt, Scott, a year. But I don't even have to generate the cash flow for the 30 million. I could actually sell equity in order to pay the 30 million, and we have raised 10.5. We've been generating $1 billion of equity a week. I mean, $1 billion of income and equity a week. So the real magic of this is you need an asset which is going to outperform the S&P, that's also going to stay more volatile than the S&P, and then you need a public company that's 100% Bitcoin. And when you sell securities backed by Bitcoin, you need to buy the Bitcoin with it. And because you're actually feeding back the capital back into the system, it's like a triple amplifier because it's driving up your assets, it's driving up your volatility, and it's driving up the price of Bitcoin.
My understanding is there's no such thing as risk-free return. And I'm just trying to paint out a doomsday or a downside scenario here. Bitcoin, as you referenced, is highly volatile. A year ago, it was 70% lower than it is now. 5 years ago, it was 90 or 95% lower. Volatility means it goes way up, it goes way down. Bitcoin goes to $5,000, and the underlying value of your Bitcoin holdings no longer represents the claim or the assets it once did. Your stock goes way down. It is way below the strike. You have to issue massive amounts of dilutive share price. The stock crashes, and you're not able to issue more debt. Isn't that the downside scenario? There may be more upside here, but there is a doomsday, right?
Well, the best way to say it is the risk that you're accepting is Bitcoin extinction risk. Like if Bitcoin goes to zero tomorrow, the entire business is a Bitcoin extinction risk. So if you think there's a X% chance of Bitcoin extinction, then probably you don't put 100% of your portfolio into my stock or into my bond, right?
But what if it's 10,000? What if it goes to 10,000? What happens?
Yeah, so
I'm sure your bankers have modeled this out.
The answer is Bitcoin goes to 10,000. The bonds are going to pay off at par. You might not get 3x your money on the bonds, but you're going to get your money back.
That's important, right? When you issue a 0% note, you have a condition on those notes so that no matter what, the bondholder will not lose, but they might not get the return that they're looking for, but they will get their money back. And so in the case of GME, right, the $1.5 billion in 5 years, if the shares is below 30, the bondholder will get their money back. Good deal, right? Hopefully, but here's the thing. With the extinction, if we don't put everything on the balance sheet, which I don't think Ryan Cohen's going to do that, only that $1.5 billion would be in Bitcoin. Let's say Bitcoin go to zero tomorrow, we're still surviving, right? Not survive, even thrive. In 5 years, do you think the balance sheet just gonna stay the same? Without Bitcoin? No, we have our business. We have our, like growing at a slower rate. Yes, maybe in 10% up from here in the respect of the balance sheet in and of itself. Hopefully, the what is it? The marketable security is going to carry us through that time in which Bitcoin doesn't perform as well. Now, so long as you don't sell Bitcoin, hopefully in 5 years, it's going to correct itself. Of course, nothing would just come down straight line, up and down. The same way. It's not going to straight line up. It's not going to straight line down. Unless there's some, cyber security attacks, some meteors hitting the earth where nobody's like able to buy or sell Bitcoin, right? And so at that point in time, it's just like, okay, well, then the price of Bitcoin is not your concern at all. It shouldn't be your concern at that point, because everybody would just be like, scrambling, and maybe somebody would be able to sell their Bitcoin, but to who? To who? Right? Moran's life. Okay, great. So that's a good point. I was gonna go anyway, so I will continue maybe later on. I don't know, this afternoon, but I'm thinking. Okay, so maybe around 5 o'clock I might come back to finish this point up here, because it's really important to kind of get into. Okay. All right, you guys. Thank you so much. See you when I see you.